No indicators, no stress, just profits. That's what we're talking about today. You know, it sounds too simple to be true for most traders, and that's exactly why most never get it. They look for complexity because simplicity makes them nervous. They want flashing lights, colorful charts, and magic formulas. But the market doesn't speak in colors or indicators. It speaks in movement, in rhythm, in pressure. If you can read that language, you don't need much else. This ties right back to the previous video on 4 ways to read market intent. Because once you understand the intent behind price, what the market wants to do, you stop needing indicators to tell you what already happened. You begin to see it unfold before your eyes. Now, let me tell you something that every trader learns, though most learn it too late. The market rewards clarity. It punishes confusion. And nothing confuses a trader faster than a chart cluttered with signals that all tell a different story. Ever notice that? One indicator says buy, another says sell, and you end up frozen, waiting for confirmation that never comes. I never used indicators to make decisions. I used price. I used behavior. I watched how the market reacted to key levels, how it handled pressure, how it behaved after big days. Because the market always leaves footprints. And if you train your eyes to see those, you're ahead of 90% of the crowd. Tell me, what's easier to trust? Your own judgment, honed through experience, or a mathematical formula coded by someone who never met the market you're trading? You see, trading without indicators isn't about ignoring data. It's about stripping away what isn't necessary. It's about learning to see clearly, the same way a hunter reads tracks, or a sailor reads the wind. You don't need to measure the wind with a digital sensor to know which way it's blowing. You just have to feel it. And here's the truth most traders don't want to hear. It's not the lack of indicators that makes trading stressful. It's the lack of conviction. If you don't believe in your method, every tick against you feels like an attack. You start to panic, to doubt, to jump from system to system. But once you understand that price is the final truth, that everything else is commentary, the stress begins to fade. Think about it. The market moves up or it moves down. That's it. Every trade is just a bet on which side has control. You can either read that control in the structure of price, or you can chase it in lagging data. Which sounds simpler to you? When I traded, I spent more time watching than acting. I waited for the market to reveal itself. Patience is the trader's best weapon, yet it's the one most people throw away first. Everyone wants to act, to trade, to be in the game every second. But markets don't pay for movement. They pay for correctness. A trader without patience is like a farmer digging up his seeds to see if they've grown yet. You can't rush the market. You can only align with it. That's why I say no indicators, no stress. Just profits. It's not a slogan. It's a mindset. A clean chart reflects a clean mind. When you remove the noise, you give your judgment room to breathe. You can see the flow of accumulation and distribution, the heartbeat of the market. That's where the real edge lies. Let me ask you, how often do you look at a chart and immediately second, guess your first instinct because an indicator told you otherwise? That's not analysis. That's dependency. A good trader trains his instincts until they're as sharp as any tool. Now, don't get me wrong. Discipline still rules the game. Simplicity without discipline is just guessing. Every trade must have purpose, timing, and risk control. I never placed a trade just because I felt like it. I traded because the setup proved itself to me, through price action, through behavior. You remember in that earlier video when we talked about market intent? This principle connects directly to that. Reading intent is the foundation. Trading without indicators is the application. When you can see where the big money wants to go, you don't need a technical signal to tell you to follow. You're already standing where the current is strongest. The market is a living thing. It breathes, it faints, it traps. And every trap is set for those who rely too much on what's visible. The market loves to fool the obvious eye. That's why I always watched how prices acted, not what some tool told me about them. You know what happens when you rely on indicators? You end up trading the indicator, not the market. That's like trying to navigate a storm by watching the compass needle dance instead of watching the sky. Trading is a game of psychology, not math. The math comes after. The money comes after. The psychology comes first. When you stop outsourcing your thinking to indicators, you take full responsibility for your trades. That's when you start to grow as a trader and as a person. And growth in trading is wealth. Because every insight, every lesson, every time you stay patient instead of panicking, that's money earned in the long run. Wealth isn't just what you make in a winning trade, it's what you keep after a losing one. Ever notice how the best trades feel calm? They don't rush you. They don't demand excitement. The stress only comes from confusion, from trying to outsmart a market you don't yet understand. Once you start to see the flow clearly, it's almost boring. That's when you know you're doing it right. A trader's chart should look like a battlefield after the smoke clears. Simple, clear, decisive. Every candle tells a story. Every level shows a fight. When you can read that story, you don't need someone else's version of it. The professionals understand this. The crowd doesn't. The crowd wants signals, the professional wants structure. The crowd reacts, the professional anticipates. And anticipation comes from understanding intent. The same thing we broke down in that last video. You see how it ties together now. When you understand why price moves, you don't need to ask what it's doing. You already know. So when I say no indicators, no stress, just profits, I'm not promising easy money. I'm promising clarity, and clarity in trading is worth more than gold. Market intent matters more than market signals. That's the truth most traders overlook because they've been trained to chase confirmation instead of understanding. Every indicator, every moving average, every oscillator, they're all just translations of the same thing, price. But price doesn't need translation. It tells its own story, clear as day, if you learn how to listen. The trouble is, most people don't. They're too busy chasing green and red arrows on their charts, waiting for something to tell them it's safe to act. But safety and certainty don't exist in trading. Only understanding does. When I talk about market intent, I'm talking about the underlying purpose behind every move. Why did price push higher after that dip? Why did it stall near that level? Why did volume swell just before a reversal? Those aren't coincidences. They're the market revealing what side holds control. And once you know which side that is, buyers or sellers, you don't need a signal to tell you what comes next. You can feel it. The problem with signals is that they're reactive. They tell you what happened, not what's happening. By the time your indicator crosses, the professionals have already taken their positions. You're chasing footprints instead of walking beside the giants. And that's where intent comes in. If you can read intent, you can anticipate movement. You can see the build-up before the breakout. You can sense when accumulation turns into expansion. Ask yourself this: do you want to follow the market, or do you want to understand it? Because following will always keep you a step behind. Understanding puts you a step ahead. When you see intent, you start recognizing the patterns of behavior that repeat over and over, not because of algorithms, but because of human nature. Fear, greed, hesitation. They shape every candle, every swing. Let's take an example. Suppose price keeps testing a resistance level again and again. Most traders wait for a breakout signal, an indicator to flash. Buy. But if you're reading intent, you already know what's happening. Each test weakens the level. Each push absorbs sellers. The intent is clear. The market wants to go higher. You don't need a confirmation candle. The build-up is the confirmation. On the other hand, when a market drifts upward on low volume, you don't need an RSI to tell you it's losing strength. The intent is fading. The professionals are exiting quietly while the public keeps buying. You can see that in the behavior of price itself. Intent always shows its hand to those who are patient enough to watch. In that previous video on 4 ways to read market intent, we talked about how intent reveals itself through structure, volume, and reaction. What we're talking about now is applying that knowledge. Trading based on the why behind price, not just the what. It's like reading the emotions of the crowd instead of their words. Anyone can see that the market moved up. But can you tell why it moved up? That's what separates a student of the market from a gambler. Here's the beauty of it. When you trade intent, you don't need to predict. You just align yourself with the side that's showing strength. You're not guessing, you're reading. The market becomes a conversation, and you learn to listen between the lines. Every trap, every fake move, every shakeout is just the market testing conviction. The crowd gets shaken out because they're watching signals. The professionals stay calm because they're watching intent. Intent leaves clues. Strong intent is shown in conviction. Fast moves with follow-through, solid reactions, clean structures. Weak intent shows hesitation, messy pullbacks, indecisive candles. If you train yourself to notice these details, your trading transforms. You stop reacting to what just happened and start preparing for what's about to happen. It's the same as poker. The best players don't win because they get lucky cards. They win because they read the table. They sense who's bluffing, who's confident, who's nervous. The cards are just tools. The real edge is in reading intent. The market is no different. Price is the table, volume is the behavior, and sentiment is the tone. Read those three, and you don't need a flashing signal to tell you what's coming. Do you ever notice how the biggest reversals happen when indicators still look perfect? That's because intent shifts before signals catch up. By the time the chart confirms it, the professionals are already taking profits. Indicators can't measure intent because intent is psychological. It's not a number, it's behavior. And behavior is always first to change. Now, here's where mindset comes in. Reading intent requires patience and emotional control. You can't rush understanding. You have to sit with the market, observe it, learn its rhythm. It's like studying a living creature. You can't dissect it with tools and expect to understand its nature. You have to watch how it moves in the wild. That's where real insight comes from. The irony is, the more you depend on signals, the less you develop your own eye. You lose touch with the market's natural flow. But once you strip all that away and focus purely on intent, on the interaction between price and reaction, trading becomes much simpler. You stop chasing. You start following logic. Intent shows you where smart money is positioning. It shows you when effort no longer matches result, when volume spikes but price stalls, when a breakout lacks commitment, when retracements shrink in size. These are the moments where the story shifts. That's the kind of information no indicator can give you in time. You can't control the market, but you can control your understanding of it. The deeper that understanding, the less noise you need. You won't care what a stochastic says or what a moving average points to. You'll see the push, the reaction, the absorption, and you'll know. And once you start to know, you begin to trade differently. You become patient, selective, calm. You stop needing to be in every move because you only want the moves that show real intent. Those are the ones that pay. Those are the ones that let you trade with conviction instead of hope. Indicators breed dependency. Observation builds instinct. That's a lesson every trader has to learn at some point, usually the hard way. Most traders begin their journey thinking more tools mean more certainty. They fill their charts with lines, colors, oscillators, and signals, all in the hope that one of them will finally tell them when to buy or sell. But what they don't realize is that every indicator they add takes them one step further from the market itself. They start trading signals instead of price, rules instead of rhythm, and in doing so, they lose touch with the one thing that truly matters: instinct. When I say instinct, I don't mean guessing. I mean trained intuition. The kind that comes from watching the market day after day, noticing the subtleties of movement, understanding what's normal and what's not. It's the same kind of instinct a seasoned sailor has when he feels the wind shift slightly and knows a storm is coming long before the sky darkens. That kind of instinct can't be taught through indicators. It has to be earned through observation. Now ask yourself something. How often do you look at a chart and feel torn between what your eyes tell you and what your indicators are showing? Maybe the market looks strong, but your RSI says it's overbought. Or maybe price is falling fast, but your MACD flashes a buy. In that moment, who do you trust? Yourself or the tool? Most traders trust the tool because it feels safer to blame the indicator if the trade fails. That's dependency. And dependency is death for a trader. You see, indicators can make you lazy. They give you the illusion of precision. But precision is not the same as understanding. The market doesn't care about your perfect setup or whether your signal just crossed above the line. The market moves on intent, on behavior, on the flow of capital. When you rely too much on tools, you stop seeing that flow. You start reacting to what's already happened, not to what's happening right now. Observation, on the other hand, keeps you sharp. When you watch the market long enough, you begin to recognize how it breathes. You see the way it tests levels, the way it traps impatient traders, the way momentum builds before a breakout. These are things no indicator can show you in real time. They're patterns of human behavior, not mathematical equations. And since markets are made of people, behavior always matters more than calculation. Back when I started trading, I learned early that the best trades didn't come from signals. They came from understanding. I could tell when a move had strength just by the way it formed. If price rallied and then held steady instead of snapping back, I knew strong hands were in control. If it rose too fast, leaving no room for pullbacks, I knew it was mostly emotion driving it, and emotion always burns out quickly. That kind of insight came from watching, not from measuring. In that previous video on 4 ways to read market intent, we broke down how to recognize purpose behind price movement. What we're talking about now is how to internalize that knowledge. Observation turns knowledge into instinct. It's one thing to know what to look for, it's another to feel it in the moment without hesitation. That's what separates professionals from the crowd. Indicators can only tell you what happened after the fact. But instinct can sense what's coming before it's obvious. It's like the difference between reading a script and listening to the tone of someone's voice. The script tells you the words, the tone tells you the truth. In trading, the tone is in the price action, the pace, the pauses, the pressure. Dependency on indicators also weakens your emotional control. When you rely on tools to make decisions, you're constantly looking for permission to act. You wait for confirmation that never feels good enough. You hesitate. You second guess. You miss moves, then chase them. All because you stopped trusting your own eyes. But the market doesn't reward hesitation. It rewards clarity. And clarity comes from observation, not from waiting for signals to agree with each other. Ever notice how the best traders talk about tape reading, not indicator reading? They read the tape because it shows the raw movement of the market, the true heartbeat. Indicators filter that heartbeat, smooth it, and make it look prettier. But in doing so, they strip out the emotion, the energy, the subtle cues that reveal intent. When you only look at the processed version of price, you lose sensitivity to the real thing. It's like trying to learn a language through subtitles instead of listening. And that's what trading really is. Learning the language of price. The more you watch, the more fluent you become. You start to sense when something doesn't fit, when a move feels forced, when a level is about to give way. You don't need a red or green arrow to tell you that. Your instinct tells you first, because it's been trained by thousands of repetitions. But here's the hard part. Developing instinct takes time. It requires patience, discipline, and humility. You have to be willing to observe without acting, to learn from movement without needing to profit from every moment. Most traders can't do that. They crave action. That's why indicators are so tempting. They make it feel like you're always doing something. But doing something and doing the right thing are two very different matters. Observation teaches you to wait. It teaches you to recognize high probability moments, not just any opportunity. You start to see when the market is resting, when it's coiling, when it's ready to strike. You learn that the best trades often come after long stretches of quiet. That kind of patience doesn't come from signals, it comes from trust. Trust in your understanding, trust in your read, trust in your instinct. And when you build that trust, trading becomes quieter. You don't panic when a candle wicks against you, because you know what's normal. You don't rush to enter because your indicator flashed a signal. You wait for confirmation in the structure of price itself. You stop trying to control the market and start sensing with it. Observation is the art of seeing what others overlook. It's what allows a trader to spot accumulation when everyone else sees congestion, to sense exhaustion before a reversal, to understand that not every pullback is weakness. When you can read those moments naturally, you've moved beyond tools. You've entered mastery. Because dependency makes you reactive, but observation makes you aware. And awareness is what turns a trader into a professional. Someone who doesn't just trade the market, but trades with it. Stress fades when conviction replaces confusion. Every trader knows that stress isn't born from losses. It's born from uncertainty. You can take a losing trade with calm if you understood why you took it. But when you enter a trade based on hesitation, or mixed signals, or someone else's opinion, every tick against you feels like pain. That's confusion. And confusion in trading is a costly emotion. Conviction, on the other hand, is quiet. It doesn't shout. It doesn't chase. It stands firm because it knows what it's looking for and what it's willing to risk to find it. You see, most traders think stress is part of the game. They think it's normal to sweat through every trade, to check their phone every minute, to flinch when the price moves. But that's not trading. That's gambling with anxiety. The reason they feel that way is because they don't have conviction in what they're doing. They don't have a process they trust. So every move of the market becomes a personal judgment, a test of whether they're right or wrong. That kind of thinking burns you out fast. Conviction doesn't come from stubbornness. It comes from understanding. When you know why the market is doing what it's doing, and why you're positioned the way you are, you don't need reassurance. You've already accepted the risk. You're calm, not because you know the outcome, but because you know your reasoning. That's the difference between stress and focus. One drains your energy, the other channels it. Ask yourself this. When you take a trade, do you know exactly what would make you exit? Or are you waiting to see how it goes? Because traders who see how it goes are the ones who suffer the most stress. Every second they're evaluating, second-guessing, hoping. But traders with conviction know their conditions. They know their invalidation point, they know their logic, and once they act, they stop thinking about it. The work is done. The market will do what it does. Confusion happens when you have too many opinions in your head. Maybe your indicator says buy, your mentor says sell, your gut says wait, and the market itself seems undecided. That's chaos. You can't trade clearly in that state. Conviction cuts through that noise. It's not about being right. It's about being certain of your own method. When I traded, I never felt calm because I was lucky. I felt calm because I trusted my read. I'd spent enough time watching price that I could tell when it was genuine and when it was fake. I knew the difference between a test and a trap. And even when I lost, it didn't shake me because the loss came from a calculated decision, not confusion. The market punished my timing, not my thinking, and those are two very different things. In that previous video on 4 ways to read market intent, we talked about understanding the why behind market movement. This is where that principle proves its worth. When you can read intent, you build conviction naturally. You stop guessing. You stop relying on external confirmation. You begin to trade with clarity, and that's when stress begins to fade. Conviction also simplifies decision-making. You stop chasing every move because you know what setups fit your plan and which ones don't. You become selective. The noise of the market, the endless chatter, the opinions, they all fade into the background. You're not trying to catch everything anymore. You're waiting for your moment. That's how professionals trade. With calm, selective aggression. Confusion, on the other hand, makes you reactive. You see a move and jump in because you're afraid of missing out. You add to losers because you're afraid to be wrong. You cut winners too early because you don't trust your edge. That's the cycle that keeps most traders stuck. Fear, hope, doubt, repeat. And at the heart of that cycle is confusion. Conviction ends that cycle. When you know your method inside out, when you've seen it win and lose, When you understand its strengths and weaknesses, you stop panicking. You start respecting probability. You stop asking, will this trade work? And start asking, does this trade fit my plan? That's the shift that removes stress. The mind is quiet when it trusts itself. The market can move fast, news can break, candles can spike. But if your reasoning is solid, you don't react emotionally. You observe, you adapt. You act only when necessary. It's not indifference, it's discipline. The same way a surgeon doesn't panic when a heartbeat spikes. He follows procedure. Conviction is a trader's procedure. Think of the traders who blow up their accounts after a streak of losses. It's rarely the losses themselves that destroy them. It's the doubt that creeps in afterward. They start tweaking their method, adding indicators, changing time frames, trying to fix something that isn't broken. They lose faith in their system and in themselves. But traders with conviction don't crumble after losses. They review, they learn, and they stay the course. That steadiness is what keeps them in the game long enough to win. Ever noticed how calm professionals look when they're trading live? It's not because they're immune to risk. It's because they've accepted it. Conviction allows acceptance. They know losses are part of the business. They've already priced that reality into their mindset. The amateurs, meanwhile, are fighting reality, hoping for perfection in an imperfect game. Confusion is emotional. It makes you chase excitement instead of results. It makes you equate activity with productivity. But trading is not about being active, it's about being accurate. Conviction keeps you patient, keeps you grounded, keeps you from jumping at every shadow. You can't control the market, but you can control how prepared you are when it moves. And that preparation is what breeds conviction. The more you simplify your process, the stronger your conviction grows. Because simplicity removes doubt. You start seeing the market clearly. Clean charts, clean reasoning, clean decisions. That's why I always say clarity is capital. The clearer your vision, the more confidently you can trade. Conviction isn't arrogance. It's quiet certainty. It doesn't argue with others' opinions. It doesn't need to prove itself. It simply acts when the setup appears and waits when it doesn't. The market rewards that kind of composure. The crowd, driven by emotion and confusion, becomes the liquidity for those who have conviction. Stress fades when conviction replaces confusion, because conviction brings order to the chaos. It gives you something solid to stand on while everything around you moves. You stop feeling like a victim of the market and start feeling like a participant with purpose. You stop fearing uncertainty because you realize uncertainty is the nature of the game. But confusion is optional, and once confusion fades, so does the stress that came with it. Reading behavior beats predicting direction. That single shift in mindset changes everything for a trader. Most people come to the market thinking their job is to forecast, to guess where price will go next, to call tops and bottoms, to be right. But the market doesn't reward fortune tellers, it rewards observers, the ones who watch how price behaves, not where it should go. Because the truth is, no one knows the future. The best traders don't pretend to. They simply recognize when the behavior of price confirms strength or weakness, when the flow aligns with probability, and when it doesn't. You see, prediction feeds the ego, but observation feeds the pocket. Every trader wants to feel smart, to call a move before it happens, to be the one who saw it coming. That desire for glory is what traps them. They spend hours analyzing and forecasting, yet the market keeps humbling them because it doesn't owe anyone validation. But behavior, that's objective. You can't argue with behavior. Price either follows through or it doesn't. It either reacts strongly or it hesitates. And those reactions tell you everything you need to know about what the market participants are thinking and feeling. Ask yourself something. What gives you more control? Trying to predict the next move, or waiting for behavior to reveal what side holds control? One path is filled with guessing and stress, the other is built on evidence. A trader who reads behavior watches for how price reacts to key levels, not just whether it hits them. Because levels alone mean nothing without behavior to confirm them. A breakout is only as strong as the conviction behind it. A reversal is only as real as the reaction that follows it. When I traded, I never tried to predict the next move. I waited for the market to show me its hand. I'd watch how it behaved after a big run. Did it consolidate smoothly, or did it collapse under its own weight? I'd study how it handled support. Did buyers step in with urgency, or did they fade away quietly? That's behavior. That's the pulse of the market. You can't see that through predictions or fancy indicators. You have to feel it through observation. Behavior shows intent. Prediction only shows opinion. Every price movement is a message. Buyers testing their strength, sellers defending their ground. When you read that dialogue, you no longer care about predicting direction. You start reacting to evidence instead of expectation. That's the professional's edge, because while others are arguing about where the market should go, the professional is already aligned with where it is going. The crowd always wants to predict because it feels powerful. They think being early equals being smart, but early without confirmation is just guessing with extra risk.